All right, Randy back again here with a new video. Okay, guys, so today I'm going to talk about why you should prioritize risk reward over pips. All right. I see a lot of people saying that, I catch major pips. This week I caught 200 pips. Last week I caught 500 pips. Let me tell you now that all of that stuff is not important, and I'm going to show you how. All right. So look at this, okay? Hey, look at this chart. Look at these two charts, okay? This is on the H4 time frame. This is on the 1 minute or even 5 minute time frame. Okay. So now if I had to tell you that these trades are the same, these two trades are the same. Okay. This is a 139 pip trade. Okay, you can see it here, 139 pips. All right. But this is a 38 pip trade. Understand? But they are the same. Let me explain to you why. Why are these two trades the same? These two trades are the same because the risk to reward ratio is of 4.41. Okay, so it's 4. And then here as well, it's still, it's 463. Okay, this trade is actually slightly better than this one instead. So why is that? Because look at your risk. Your risk for this is your risk, right? Your risk is always one. All right. You're risking one to make 4.41. All right. And then it's the same here. You're risking one to make what? 4.63. Okay. So you see the difference, right? So in this trade here, you caught a lot more pips than this trade. But in this trade, you would have made equally the same amount, closely the same amount of this, or slightly even more than this trade. But this trade was like 139 pips. All right. So I know it's kind of confusing when I show it like this, but let me jump on the chart and to actually explain it in detail. Okay. So here is the chart of gold. All right. Like I'm really going to be quick with this. Okay. So look at this. This is a breaker structure, right? You got a breaker structure, OB, blah, 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 mitigation. Okay. Market got there. You got your entry. You entered. Okay. So this is what? This is a 278 pip move. Okay. And then the stop loss would have been 33 pips. Okay. This trade here is a 824 risk to reward trade. All right. So now here we have a smaller trade than this. Okay. And the smaller trade is a trade of like 100 pips. And the risk was 10 pips. All right. So now this is a 1 hour time frame trade. Okay. And then this is an M5. This is an M5 5 minutes time frame trade. Okay, so let's look at the 5 minutes time frame trade. Okay. So look at the 5 minute time frame trade. Okay. So the 5 minute time frame trade is 101 pip move, and then you're risking 10%. But the 5 minute trade is a 9.66 risk reward trade. All right. So 9.66. Okay. Okay, let me give you a quick example on this. Okay. Let me take out my calculator. Okay. I'll show you something. All right. I'll show you why this trade is bigger than this. All right. So look at this. Okay. So say you are funded. Okay. Say you have like a $5,000 account. Okay. And you're risking 1% of that account per trade. Okay. So 1% of 5,000 is $50, right? So $50 divided by 10 pips. Okay. Divided by 10 pips. Okay. It gives you 5. All right. So 5 is basically the lot size, but it's not 0.5. It's not 5.00. So you need to take the decimal to the left. Okay. So now this makes it, you need to, okay. So basically 5 means you will be making $5 per pip. Okay. So what is the lot size that is correct to this? The lot size to this is 0.50, right? 0.50. Okay. 0.50 is a lot size. Okay. But for the sake of this video, I'm just going to say, okay, 5 divided by 10 pips. Okay. 10 pips. It gives me 5. That means that you will be making $5 per pip. Okay. The lot size for that is 0.50. All right. So you time that by 100 and 101. Okay. 101. All right. And it gives you $505. Okay. This is the smaller trade. Okay. $505. Okay. Remember this. Now, that's by risking what? 1% of the account. Okay. Now let's go back to the bigger trade. Okay. The 1 hour trade. All right. Let's go back to the 1 hour trade. Okay, here's the 1 hour trade, right? Here's the 1 hour trade. Remember, the 1 hour trade is a 276 pip move, and then your stop loss is what? Is 33. Okay, so let me pull up the calculator again. So still the same account, $5,000, you're risking 1%, okay, which is $50. Okay, $50 divided by 33, okay, and divided by 33, okay. That gives you 1.5, blah, 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 okay? So that just means you will be making $1.5 per pip on this trade, okay? So the lot size to this is 0.15, okay? So now you time that by 276, right? Times 276. What does that give you? 418 pips. Okay, remember the first trade was what? 550. The smaller trade gave you a profit of 505. The bigger trade gave you what? 418. And you are on both trade, you risk 1%. So I know this is pretty crazy, but like guys, like you really need to look into this. Like, don't care. Like, this is actually when I realized this, I stopped caring about catching big moves. Like, I completely stopped. Like, I can catch a little move like this and make as much money as I'm making here, or even more. So that's actually why I say that you should prioritize risk to reward over the amount of pips that you catch. Understand? So, but you can only do these things if you use proper risk management. Like, you need to know exactly how much you're risking per trade in order for you to make this work. So guys, I just wanted to make this quick video. I want to keep it short. Don't forget to like and subscribe and text me on Discord. My username is Randy Maniai. The link is in the description below. All right, guys. So yeah, I mean, go on your charts, look at this. I think it's gonna blow your mind, and it's actually going to improve your trading, and you're actually going to stop caring about the amount of pips that you catch. All right, guys. So cheers.